Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, December 2nd, 2024. It was actually a pretty boring day. The overall, say, energy of the S&P was down, but the problem with not seeing any movement on the down end was because we had the Qs that were so strong, and they were basically just holding up everything. So it made it a pretty easy trade because when we know energy is coming down based off of the signal weight and the cycle momentum, but we have price up and then we have the cues up. You want to take a market neutral. So we took a condor trade right around here. We did the 65 and the 75, and we did the 6,000 and the 59.90, and it came down. Once it came down to these levels here, I actually closed the trade, left it's about 750 on the table, but that's fine because we did all right with the trade, and it was a quick one. And instead of waiting to see if we're going to get a move down or a spike down or a spike up, you take the profits and you just wait for the next trade. So we actually did pretty good today. Again, 2,800. We only did two trades. The people in the chat room, they probably, I believe they were like 1,600 because the last trade I didn't actually put in there because it was more of a directional trade, and those are risky. But the way I put it on, it gave me a little bit of leeway to see if it was going to be right. So I was able to close that, and that's what gave us up to the 2,800. 54,180 profit loss year to date, so 54%. So again, decent day. So let's get back to what we're looking at here. This trend line seems to be in place, right? Play right here. You can see every time we hit it, we got a little bit of a pullback. We never really got quite up there. So if they're going to, really what we want to keep an eye on is right around this 60-60, which I've been saying is this trend line right here brings us right up to around that same thing. So the upside, we can see the bulls possibly having some problems up there, and if they get through, then we're looking up somewhere at the 6,100. But we're very, very overbought right here. We have bearish divergences on the 60-minute chart. We have hang on one second. Okay. And as you can see here, we have bearish divergences on the daily chart as well. So this high right here was a momentum coming right here. And you can see we're making the new highs, and we don't even have momentum starting to move back up. So we got sell signals on the daily chart. We got sell signals on the 60-minute chart. And we got sell signals on the 15-minute chart. So as far as from the technical end of things, you would think that this market's going to move lower, but the problem is we're kind of in a pretty bullish time period. The end of year, Christmas. But that's why I'm on the side that you really want to just take things day by day. You have to be very careful shorting because a lot of people are very bullish going into 2025. I saw a chart today that was definitely caught my interest, and it's something that we want to keep an eye on. And what it basically is, it's called the jaws. And the reason why is it's a open jaws or something like that. But basically what it is you have earnings that are going down as price is going up. Now this is not it. I'm just giving you an example. So what happens is it has this jaw, like it's opening up right here, and it from what I read, I've never really followed it, but the person that I do is very, very smart and been in the business for a long time. And it's only happened like 6 times in the last 10 years, and it has not been bull friendly coming out of it. So it's something we just want to keep in mind because the earnings projections are heading in the opposite direction of stock prices. So it's something I just want to, because me personally, I'm bullish going into 2025 just because I think a lot of the things that have been holding businesses down are going to be removed, and that's going to open up, say this open up the doors for companies to start making more money, and maybe that's what's going to try and get those earnings back up. But it's something that it's a pattern that is, from what I've read, pretty dangerous. So we have the sell signals on each one. That the obviously the bulls are ignoring that, and I'm not surprised. I'm not fighting it, saying they're stupid doing this and that. I'm just saying we want to take things one day at a time. Close the trades at the end of the day. Wake up and see which way we want to trade the next day. To me, that's the easiest way to trade. So, again, if the bulls can take out these highs, we're then looking at a move coming somewhere up into the 60-60. Obviously, this right here is going to be the important support line that the bears need to get through and the bulls need to defend. You can see it's almost price support, but we have the moving average. If they lose that, then I can see a very, very fast move coming down to the 60-20. And if they lose that, then we're coming down into the 59.92. So upside 60-60, downside first support 60-35. Second important support, 60-20, and then we move all the way down into the 6,000 and the 59.92. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys.